Good morning, everyone. Welcome. Thank you for joining us today. I am pleased to introduce our speaker for this session, Jeff Tompkins, who is the President and Chief Investment Strategist of Altos Trading. His successful career led him to create Altos Trading to help others achieve financial freedom through consistent and profitable trading strategies. To our viewers, please ask any questions you may have in the live chat box. Time permitting, our speaker will have the time to answer some of your questions. I would also like to point out that Jeff and Richard will be available after this presentation, where they will host a Zoom meeting, and you can access that in their virtual booth. With that said, thank you so much, Jeff, for joining us today. The floor is all yours.
Thanks so much, Aya. Great to be here. Welcome, everyone. Today, I'm going to be sharing my strategy and system for spotting top performing stocks in any market. We'll spend about 40 minutes or so together. And as Aya mentioned, we'll be in the virtual booth afterwards to answer any questions that may still be lingering and also share some more exciting information in our Zoom presentation platform, and that's all accessible through the virtual booth. So welcome again, and we'll go ahead and get started. All right, welcome again, everybody. As you can see, the margin of victory between first and second place in a lot of major sports can be very, very small, but the difference in results can be very big. And that's going to be the theme of our topic today as we look at beating the market using relative strength. Before we get into that, I'm going to go ahead and give you a little bit of background on myself. So I have 22 years of experience trading the stock options and futures markets. I received professional training at Morgan Stanley at their trade desk, and I'm the founder and chief investment strategist of Altos Trading. We currently have over 50,000 members in over 100 countries across the globe. So a very diverse group of traders and investors that we've worked with to become more successful and consistent in their results. I'm also a hedge fund manager, so I manage money for my clients at Altos Capital, and I'm the founder and manager of some of the highest and top performing options and stock alert services on the market. And we're going to talk to you a little bit about that today as well. I'll read you a quick disclaimer before we get into the fun stuff. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and must meet suitability requirements. We will be going over some past results from the strategy and system that I'll be sharing with you today. And just know that any of the results that we share are not indicative of future performance, although they are going to be based on actual results from the system that you'll be learning today. And of course, due to the time critical nature of trading, brokerage fees, and activity of other subscribers, there is no guarantee that subscribers will mirror the performance shared in this educational presentation. All right, so by the end of our session, you'll discover how to gain that extra 1 degree trading edge that can put you ahead of some of the best traders and investors in the world. Statistically speaking, fewer than 1% of professional money managers are actually able to beat the market. So it's a very difficult endeavor if you don't know how to approach it correctly. And hopefully I'll help you with you guys with that today. So whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets, especially as market conditions are rapidly changing, and it appears that this very long secular bull market that we've been in is coming to an end. And so I want to help you guys navigate that and be successful regardless of market conditions. So let's talk about that 212-degree difference. As you saw in the video at the start of our presentation, at 211 degrees, water's hot, but it's still standing still and it's not doing much. So it's kind of like a lot of stocks do before they explode. They'll often trade flat or be range bound for a period of time before they actually attract buying pressure and ultimately drive the share price up. And it typically takes a lot of buying pressure to do that, and institutional buyers to come in to push shares up significantly in a stock. So it's an interesting analogy because as the temperature rises, when we look at water, it only takes that 1 degree to take standing water that's basically sitting still to create steam. And steam is obviously a very powerful gas that can actually power a locomotive train. So it's pretty incredible that 1 degree makes all the difference between something that really is just sitting there doing nothing to something that can power a locomotive. So the takeaway there is it doesn't take a lot to make a big difference. And you'll see that here very shortly. And that extra 1 degree can make all the difference in trading and investing. So it's kind of like when a stock starts to outperform a major benchmark index or sector and then skyrockets. And we'll often see that where, even a stock within a major index, let's say the NASDAQ 100, actually outperforms the broader index. And that's what our goal is, to identify those, to spot those, and then use them to our advantage. So typically how that's done and has been done in the past is using the relative strength index, or the RSI, which is an indicator available virtually on any charting or retail broker platform. And it's a momentum indicator, and it's a technical indicator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions. And it can be used with any asset, stocks, futures, Forex, whatever you trade. And it's basically displayed as an oscillator, which is a line graph that moves between two extremes. So it's bounded. It has a maximum and a minimum. And for the RSI, that is 0 and 100. And this indicator has been around a long time. It was first introduced by J. Wells Wilder in his book, New Concepts in Technical Trading Systems, back in the late 80s. And it's since been used widely for identifying overbought, oversold conditions in securities. And it's used by retail traders and institutional traders and investors alike. So widely used. And in terms of interpreting it, the traditional interpretation and usage of the RSI is that a value above 70 typically indicates that the security is becoming overbought or overvalued and may be primed for a trend reversal. Generally, when it reaches that level, if somebody has initiated a long position, they would look at potentially exiting. Or if there's bearish sentiment, somebody might potentially look at shorting the security at those levels. Now, conversely, an RSI reading of 30 or below would indicate oversold or undervalued conditions. So a lot of people will look for low RSI readings as an indicator to go ahead and buy the security or go long. But there's a couple problems with that. So we're going to look at those and then solve those problems for you on our session. So problem number one is stocks can remain overbought or oversold for extended periods of time. And we're going to visualize this on a chart shortly. So it's that old John Maynard Keynes saying that the markets can remain irrational longer than you can remain solvent. So you may get an overbought reading on the RSI on a security that continues to go up long after the overbought reading shows up on the indicator. So that's a major problem, right? Because ideally we want to be timing conditions where it's more favorable to buy or more favorable to sell. So that creates a problem for us. And we'll look at that. So this is a chart of Tesla, TSLA, and I've got the RSI indicator plotted at the bottom of the chart. Now you'll notice that in October into November, the RSI reading was above 70. And that would indicate that the stock is overbought and might be likely to pull back at some point or shift direction trend. Prior to this, the stock was in an uptrend. But unfortunately, if you were using it for that purpose, you can see that Tesla actually, while it kind of stalled a little bit and moved sideways, ended up continuing with its uptrend and quite dramatically, as it went from around $60 a share when the RSI reading was overbought to peaking around 190 a share. So that's a big move up in the context of a false RSI reading. And again, that happened in December and January, where the RSI reading was overbought for a couple months, and the stock continued to go up. Right. So this is where that problem can arise. In terms of getting an overbought or oversold reading, but then having the security continue to move in that direction. And that's the problem that we need to fix, because relative strength as a principle and methodology is very valuable, but we need to address this issue of security being overbought and continue to move up, or oversold and continuing to move down, as it relates to timing entry into a position or an investment or a trade, right? So here's another example. This is Best Buy BBY. Again, got the RSI plotted at the bottom of the chart, and you'll notice that it was kind of bumping up against that 70 overbought level there in April and May. All the while, the stock is in a fairly well-defined uptrend, right? And then you can see there in July and into late August, the stock, although it was considered overbought, according to the RSI indicator, continued to move up, right? So it never actually even really corrected or moved back down to a significant degree, even though the RSI was saying that it was overbought and it was primed for a pullback or reversal. So again, it's an oscillator, and it is always changing. So it's dynamic in nature, and it should be taken into context with the price action of the underlying security. And unfortunately, it can give us misleading readings at times. All right, so there's another example. This is one for Amazon. So again, stocks in a fairly well-defined uptrend, and there in June and into July, we're seeing overbought RSI readings above the 70 level. All the while, the stock is, again, in a well-defined uptrend, and actually moved from around 2,400 a share when the RSI reading was oversold to over 3,500 a share. So big move up, despite an overbought reading with the RSI. Okay, so that's obviously a big problem. Here's how we're going to solve it. We're going to use a different sort of technique as it relates to relative strength. All right, so the thing with relative strength is it's basically gauging the strength of the security to itself from the past. And inherently, that's going to create a lot of problems, because if the stock was, is in an uptrend and was at a lower price in the past, naturally, as it moves up, you're going to get overbought readings on the RSI. But that doesn't mean it's not going to continue to go up, right? So there's a better way to do that, and that's what we're going to look at. And this is, again, a chart of Amazon. And instead of using the old traditional RSI, relative strength indicator, we're going to apply a different formula that tells us with more accuracy and reliability whether a stock is outperforming and likely to go up. Okay, so you'll see here on the left half of this chart, between early May and mid October, the formula for the twist on the traditional RSI was actually giving us accurate information on Amazon and telling us that it was outperforming its benchmark index and was likely to move up. And you can see that it did. And then as that momentum started to stall, and the formula told us that it was shifting from overbought to oversold, you can see that it aligned with the stock price, right? After the big uptrend, it started to kind of move sideways, and then it shifted to oversold conditions after this big uptrend. And that occurred early in November. And we can see that, of course, the stock moves sideways. So it may not be an ideal time to buy shares of Amazon at this point until we see it begin to outperform once again. All right, so we go from this nice uptrend into this sideways range, and this is often where people get chopped up and encounter difficulties with their trading systems. So this is where we want to maybe not buy shares of Amazon, right? So that's problem number two. The relative strength indicator only, and we're talking about the old traditional RSI indicator, it only measures the current strength of a stock relative to its past price. So that's a problem, right? And the solution, as I mentioned, would be rather than use something that's just comparing itself to itself, wouldn't it make more sense to identify a top performing index or sector and then select a stock that's outperforming it? So then we're actually comparing the security to a broader, more relevant index that is already performing well, right? So we're bypassing that inherent limitation of the RSI where it's basically just comparing itself to itself. And that extra 1 degree difference can take a losing system and give it the steam that can spot the next stock that's ready to explode. And we're going to look at some more examples of that. And that 1 degree difference is crucial. So often when a stock begins to outperform a major index or industry or sector, it goes on to make a big move up. And not a lot of people are aware of that or know how to spot it, but by the end of our time together today, you will. And the key here is to identify stocks that shift from underperforming to outperforming relative to a benchmark index or sector. So again, we don't want to compare the security to itself. Obviously, that has inherent limitations to it and can lead to bad trades and bad investments. But once we identify these, they can be the golden ticket to beating the market, especially if we're comparing that security to a market or, let's say, an index or a sector or an industry that's already performing well. I'm going to show you how to find those as well. Because often people wonder, well, this is more relevant now than it has been in the past 10, 15 years is, what happens when the bull market's over and we're shifting into bear market territory? Well, just to use the old Jim Cramer adage, when we're in a market correction or bear market, that's going to be more challenging for a lot of people. But if you're using this twist on the RSI and using relative strength to identify opportunities, you can actually find them in bear markets. So even in the worst market conditions, there's stocks that are going up and relative strength can help you spot them. So there's always a bull market somewhere, right? And I'll show you how to find it. So just to give you kind of a comparator to the new twist on the RSI, using the formula that I'll share with you here shortly, let's look at another chart. This is Tesla. So you'll notice that I've got the new RSI formula and the old RSI. And obviously, if you look at the stock chart, the shares are on a very strong uptrend back in August in this period where we were analyzing Tesla with this formula. The stock was around $40 a share. And you'll see that that was right about there. So at that point, the RSI was trending up, and eventually by October and November, went into overbought territory. But something interesting happens here, kind of mid-September. The new twist on the RSI told us that it was actually shifting from underperforming to outperforming. So prior to that, it was moving sideways, right? And then you'll notice again that the old RSI gave us overbought readings, telling us that it was likely primed for a pullback. But fortunately, the new method that I'm going to share with you told us otherwise, right? So the stock actually went up over 1,800%, while the RSI was giving us false information. Here's another example of Teradata, TDC. All right, so let's get rid of the old RSI. We've taken it off the chart. We're only going to be using the new formula here moving forward. So you can see in October, November, December, and early into January, the stock was basically moving sideways. It wasn't doing a whole lot. But then interestingly, around the third week of January, it started to outperform. And look at the incredible timing of the formula that told us that this stock was outperforming a major benchmark index, in this case, the S&P 500. Now, at the time, the S&P 500 was performing very strongly. So again, wouldn't it make sense to compare TDC to an outperforming or overperforming or strongly performing index rather than compare it to its past price? And sure enough, shortly after this, just about a week later, the stock's up 125%, just in a matter of a couple of weeks. All right, here's another example. This is Futu Holdings. Again, comparing to the S&P 500, because back at this time, this is not from this year, this is from, I believe, last year, the stock was underperforming at the start of the year, but then it started to outperform the S&P 500, which was already performing very strongly. And sure enough, right after the formula spotted the outperformance, the stock took off and went up 380% over the next month or so. So I'm going to give you the 4 steps to identify these opportunities, and we'll walk kind of through each one of these steps and how to do them. So step 1 is to identify the top performing industry or sector, and that's fairly easy. I'll show you how to do it. Step number 2 is to screen for stocks within that industry or sector. And this is where a little bit more legwork comes into play. Then we need to compare the relative strength of each stock to an index or ETF that tracks that industry or sector. So the step 2 and step 3 are a little bit more legwork, but once we've got that figured out, we then select a stock that changes from underperforming to overperforming. So this is kind of the timing component of the 4-step process, where we would look at potentially entering a trade or an investment on an overperforming security. All right, so now I'm going to give you the formula, and then we'll go back and start with the step 1 in the process, where we would identify the outperforming sector or benchmark index. So this is the formula. I'll run through it rather quickly, but it looks complicated, but it's not. So there's 2 data points. Data point 1 is the stock price. And again, this can be used with any security, but we're just going to say stocks for now. So data point 1 is the price of the stock that we're looking at trading. And then data point 2 is going to be our reference price. So that might be, a benchmark index, like the S&P, or it could be, a sector ETF, like let's say XLE for energy, if energy is outperforming. So those are our 2 data points. And the logic is, if the stock price, so data point 1 is greater than 0, which hopefully it would be, otherwise you're trading a stock that has no value, and the reference price is greater than 0, then we're going to take the log value. So the log is basically the stock price divided by the reference price, right? So data point 1 divided by data point 2. And then that's going to be translated into the relative strength. So what we do is we take the log value and we use 2 inputs. So we use a RS length of 90 days and an EMA length of 3 periods. All right. And we take that log value minus the log value length and the EMA length, and then we multiply it by 100. And that's going to basically spit out a number. And that number is going to tell us, if it's greater than 0, that it's outperforming the data point 1, so the stock price is outperforming data point 2, the benchmark that we're comparing it to. All right, so there's the formula. Now, let's talk about the secret to finding the top performing sectors. And this is really important for right now, because market conditions have really changed at the start of the year. What I'm going to show you here is how to find high performing sectors, regardless of what the markets are doing, right? The broader indices. So this is a site called finviz.com. We're not affiliated with this by any means, but it's just a free resource. They do have some memberships, not required for the purposes of what I'm showing you. They have a lot of great freebie information on their site. So you would go to the groups tab up here in the top menu bar. Okay, and what that's going to do is it's going to take you to a relative performance page that shows you the 1 week, 1 month. It actually shows you 1 day. We're only going to look at 1 week, 1 month, 3 month, and then half year relative performance. Okay, so this is showing us sectors that are performing strongly relative to the S&P. And what we want to look for is a sector that is showing up within the top 3 across the 4 different time frames. So you'll notice here that, and this is not a current example, this is from the past, but you'll notice at the time that this was taken, industrials was outperforming, right? It was a strong performing sector at the time. So that's good news. That's a good starting point. Step 1 in the process. We now know that would be a good benchmark sector to compare a stock to, right? So if we were then to go and run that formula that I just gave you to look for stocks within the industrial sector, at the time we found Builders First Source, so BLDR. And applying the formula, you'll notice that in June and early July, it was not a good candidate. It was underperforming. You'll see that the share price actually was trending down a little bit there. But then around mid-July, the stock begins to outperform and it takes off. And you see this really nice uptrend, and it actually went up about 113% over the coming months. Okay, so you can see the incredible timing there. Here's another industrial example. So Deere, right? We're all familiar with the tractor company, DE. And you'll notice that again, in July, it was not really doing a whole lot. It was kind of moving sideways until mid-month where it began to outperform. So again, applying that formula to and relating it to the industrial sector that was already performing very strongly helped spot this opportunity in Deere, where it went up 122% over the coming months. It can open up the door to a lot of opportunities when you know how to spot these. Let's say that you spot one of these opportunities and you get into a successful trade. Well, that's not the end of the story, right? Managing a trade or an investment is just as important as entering it. So let's talk about, once you get into a successful trade using this system, about locking in profits. How do you lock in profits? So there's a two-step process. We set a target number one, profit level. So that would be a 5 to 10% initial profit target on the first half of the position. So once it's moved 5 to 10%, from the entry price, that would be where you might look at scaling out on the first half of the position. So let's say you had bought 1,000 shares, you could look at scaling out by selling 500. And then target number two is to keep the other half of the position open. So in this example, let's say 500 additional shares that are then managed with a 10% trailing stop on the second half of the position. And that's to help capture the big gains. As you saw in some of these examples we looked at, using the new relative strength formula, a lot of these can go on to make very big moves, triple, even quadruple digit moves. They're not all going to do that, but the ones that do, we want to try to capture as much of that as possible. So that's where target number two and the 10% trailing stop comes in to the system. Now, we have a lot of members who use this system and strategy to trade options, right? Because directional option strategies timing is critical. Right? It's crucial that you get the timing right, and that's what the system is designed to do, is to help you time a move in an underlying stock. So it can be used for a lot of different directional option strategies, like buying calls, selling puts, vertical call spreads, bull put credit spreads, calendar spreads. The list goes on and on. But let's look at an example of basically a simple call purchase as it relates to the relative strength system, because as you saw, our profit target one is 5%, right? And a 5% move can equal 100% options gain. So you can obviously use options to leverage these opportunities if it meets your risk tolerance, and obviously if you have the approval from your broker. So this is an example of Apollo, APO. You'll notice that in mid-April, like I think it was right around April 16th, the stock started to outperform its benchmark index. Prior to that, it was kind of moving flat and sideways. So shortly after the formula identified this, the stock took off, right? It made much more than a 5% move, but it did make that 5% move pretty quickly. So let's say that on April 16th, you had identified this opportunity and then decided to use options to play it. Well, at the time that the formula identified this outperformance, the stock was at $29.66 a share. If we were to use a call option, let's say we went out to the September expiration 30 strike calls. So those would be the strikes that were closest to the share price at the time. And at the time, those were trading for $1.70 per contract. All right. So if you were to buy 10 contracts, that would be an investment of $1,700 before any commissions and fees. And then let's take a look at how these contracts would have been impacted based on the move in Apollo. So only 6 days later, the stock had made that hit that profit target number one. It was up 5%. Okay, and that actually would have resulted in nearly 100% move in the option. So if you look at the initial price, right, purchase price of 1,700, and then look at the what the open profit would have been at that time, 1,650. We have close to 100% gain in the option in only 6 days, based on the timing of the relative strength of Apollo. So it can make allow you to leverage these types of opportunities if you decide to use options with them. You can also use the two level profit target approach that you use if you were to buy the shares. So rather than closing out all 10 contracts, you could scale out of 5 leave the other 5 open. And as you saw on the chart, the stock went on to make a very big move to the upside. And if the remaining 5 contracts had been left open through expiration, it would have allowed an additional profit of $4,225 on top of the $1,650 on those first 5 contracts. So the scaling out can work well with options, just like it can with purchase of the shares. And that would actually equate to a 297% ROI on a 10 contract position, right? So if you had bought 10 contracts and invested 1,700, that would have been the ROI on this type of opportunity. So that's an example of using options with the system. So now you guys know that when a stock gains that extra 1%, or sorry, 1 degree, and begins to outperform a top performing index or sector, it can start to boil off and result in explosive moves to the upside. Now, not every opportunity, of course, is going to result in an explosive move, but this is where our edge comes in, right? That 1 degree difference that can help us, even in difficult market conditions, spot overperforming opportunities. So I revealed my 4-step process for identifying these opportunities. And it does take a lot of time and work to sift through these. So step 1 is fairly easy in identifying the top performing sector. Step 2 and 3 is where there's a little more legwork involved because you have to sift through lots of stocks every week to find the very best opportunities. So what we're going to do for you guys, now that you know the system and you have an idea of how it works and have the formula, is offer to do the heavy lifting for you. So rather than have to spend hours and hours a day looking for these opportunities, we're going to go ahead and do the legwork for you. And our team will identify 5 to 10 opportunities just like this sent to your inbox and smartphone every week. All right, so you can take any indicator system that you're currently using. Maybe you already have something that's working well for you. And we have a lot of members that do that and simply want to hone in on the best opportunities in the market at the time. So you can apply this when we send our 5 to 10 recommendations out every week to any system or indicator you already used to help give yourself that extra 1 degree edge. So here's what the alerts come with. Again, you get access to our best trades right to your inbox, so you don't have to do all the legwork of identifying and spotting these opportunities. We'll do that for you, so you don't have to sit and watch your computer all day. We simply send those to you by email and priority text message after market hours. So you don't have to worry about being at the computer while the stock market's open. If you have a day job or you're retired and not on the golf course, you can go ahead and take these opportunities as they come in after market hours and decide if you want to take any of them, if so, which ones, and then you have plenty of time before the trading day opens the next day to go ahead and select your trades and enter them with your broker. So very easy. They come with easy to read instructions. We also include the profit target levels, and you're going to get 15 to 20 opportunities per month. So there's an abundance of opportunities. And we've continued to find these even in the bear market conditions that we've been in since the start of this year. And I'm going to share some of those results with you here in a second. So you get the ticker symbol for each stock, you get the company name, you get the stock price, you get the profit target 1, you get the profit target 2, and you get our analysis of the best stocks expected to outperform without having to spend hours and hours every day looking for these opportunities, okay? So let's take a look at some results. We launched this service about almost a year ago. So it's done very, very well. We've had some really successful wins. In fact, I think at some point, like early on, going back through the end of the year, so from April to December, we were batting above 90% in terms of a strike rate and finding these opportunities, and it's continued to do really well even in bear market correction, close to bear market conditions that we're in now. Here's XPEV was one of our earlier on trades. It went up 8% in one day. Vail went up 11% in only 4 days. DocuSign went up 12% in only 1 day. US Steel 16% in a single day. TECL 25% share price increase in only 12 days. SGH 31% in only 5 days. These are some examples of ones that just went out within the last few weeks. So for those of you who might be wondering, well, how's this going to do when the market's tanking? Well, these actually went out when the market was trading down 10-15%. MCHP up 12% in only 9 days. SGFY 13% increase in share price in 7 days. BTU 33% in only 2 days. So these opportunities can be found in any market. It's just about applying the formula to the right benchmark index or sector or industry, right? So that's the key. Those are some recent examples from the service that we've sent out to our members. So I'm going to go everything that comes along with the package and then tell you guys how you can get access to it. So what it comes with is 12 months of our relative strength signal service. So you get on average about 3 to 5 picks a week. So about 15 to 20 picks a month. Lots of opportunities over the course of the next 12 months. Normally that retails for $1,499. You're also going to get the priority text alerts to your phone if you prefer to receive them that way. We're going to throw that in to the service. Normally that retails for $299. We're giving you access to our Facebook group of over 800 members that also trade our relative strength strategy in addition to our other strategies. You can interact with them, talk to them, run ideas by each other, and that retails for $199, but we're throwing it into the package as well. We're also going to throw in a special options trading course to help complement the service. So if you're interested in trading options around these alerts, we're throwing in a special 10-hour online course. It's yours to keep. Normally that retails for $900, but we're throwing it in at no additional cost to the package as well. And again, we're delivering all of this after market close. So there's no day trading necessary. You don't have to be at your computer while the market's open, and you're going to get 15 to 20 hot picks per month. And ultimately, our goal is to help you learn to trade stocks and options with consistency. Of course, we can't put a price tag on that. So a lot comes with the package. We're throwing in 2 bonuses as well. Our professional trading series online course, which is retails at $595, and then my latest ebook, How to Create Risk-Free Trades, which is a great money management book that can be used in conjunction with the relative strength alerts. And that retails for $97. So overall, the retail value on the Money Show package today is over $3,500. Okay, we're slashing that tremendously. We're taking 92% off the retail price of this package, and it's only $297 a year. So it breaks down to $24.75 a month, and you get everything that you see on the screen. This all comes with your package. So I'll tell you right now how you can get access to it, and then we'll open it up here shortly to Q&A. We are going to limit this to 25 seats because we obviously need to take some time and help you guys get set up and running and be successful. So unlike a lot of companies out there, we don't just give you the information and say good luck. We're here to help and provide support along the way. And for that reason, we can only take a limited number of people at a time. So once the 25 seats are gone, we will shut the offer down. So if you want to claim one of those 25 seats, the link is altostrading.com/RS for relative strength. And you can go to that link and be one of the 25 members that joins us today. That link will also be in the chat box for you as well. And again, you get the 2 bonuses. You get the Professional Trading Series online course. So we're throwing in a $595 course for free, and the ebook as well, along with that. So you're getting a lot of great value with the package. And we are going to throw in a 90-day guarantee as well, because we are confident in our results. Our track record speaks for itself. If you don't make at least your membership fee back, so if you're trading this strategy in your live brokerage account and you don't make your membership fee back in the first 90 days, we're going to give you an extra year of signals on the house. So again, that's a $1,499 retail value, and you're going to get that at absolutely no additional charge. We want you to be successful. We want you to learn the system. And even if it's just, for the first year and you decide I've figured this out, I want to go off and do this on my own. We have a lot of members that reach that level, and that's what we hope for you. You can go ahead and do that, right? So we're here to help and here to get you there. So I'm going to go ahead and open it up to Q&A. And as Aya mentioned, we'll be in the virtual booth here shortly as well in just a couple minutes. And you can ask questions there as well in our Zoom session. And we can share more about the strategy and things if you have any questions. But I would urge you, if you are interested, you don't want to lose one of those 25 seats, because it's actually, it's not a marketing thing. We are going to shut the thing down. So I don't want you to go to the order form and not be able to buy it, because we're not going to open it back up once the 25 slots are gone. But if you have any questions in the meantime, support at altostrading.com. You can always give us a jingle at 800-895-9348. And again, that link to join today is altostrading.com/RS. There's everything you get along with the package. And I will go ahead and open it up to Q&A. We just have about a minute left, and then we'll shift over into the booth. So Aya, do you want to let me know if there's any questions in the chat box?
Yeah, of course. We actually got quite a few. The
Okay.
first one is from DG. She's asking if you can explain the difference between RS and RSI.
Okay. Yeah. So I've got the chat pulled up here. So really, I'm not sure what you mean by RS, but if you're referring to the presentation, relative strength is the real difference is what I mentioned, where the formula is comparing two separate entities. So a stock to a benchmark index, where RSI, the relative strength index indicator, is only comparing the stock to itself. Okay, good question, DG. Comparisons depend on time period you pick to show different results. What's the time period used? Again, the formula, Robert, and it's in the um, the system that I presented today is a 90-day look back. So we use a 90-day look back period. Let's see, Daniel, do you see any buying opportunities these days based on S&P? Yes, absolutely, Daniel. In fact, we've got another alert going out tonight. So there will be a new recommendations going out tonight. We've got some really nice opportunities selected, and those will be sent out to our members tonight. So if you join today, you'll be getting those this evening. Stephanie, for the index in question, should it be the stock same sector? Yeah, Stephanie, ideally you want to compare, if you're looking at, for instance, energy or XLE as a benchmark ETF, you'd want to ideally look at a stock within the energy sector, but not always. For instance, so market conditions are very important. So for instance, when we're in a strong bull market and the S&P is in a long-term strong uptrend, we can compare stocks that are outside of the S&P 500 index to the S&P. But again, there's a lot of discretion involved there, and ideally you want to use the same benchmark. Yeah, so are the alerts for stocks and ETFs or only for options? So actually the alerts, Stephen, are for stocks and ETFs. So you'll get a mix of both. And we also will let you know if the ETF or stock is optionable. So we don't give an actual options alert with it. That would be up to you because, again, there are a lot of different option strategies that can be used around these recommendations. But we do let you know whether it's optionable, and then you can decide if you want to use options to trade these. Okay, do any of the alerts require shorting? No, Stephen, we don't do any shorting in the alerts. It's all long positions. All right, well, it looks like I'm out of time, guys. We're going to shift over into the virtual booth. We'll be in the chat as well as in the Zoom within the virtual booth. So just give us a couple of minutes to get over there. Thanks everybody for joining. Thanks for the great questions. Thanks AF for having me on, and we'll see all of you over in the virtual booth here shortly.
Thank you. And I just want to clarify, make sure for everyone who wants to join the Zoom meeting to just refresh your page, and then you will be able to see join Zoom discussion on the right-hand side of the virtual booth. So like Jeff said, just give them a minute. It is open for you to join. And they will be there shortly. And again, thank you everyone for joining us today. And thank you, Jeff, for the brilliant presentation. And stay tuned for any of our upcoming presentations. Have a great day.